There is the bell. It's 4 p.m. Eastern. We welcome you to this session here today on trading growth and value stocks. My name is James Boyd. Alongside with me, good friend Connie Hill. And Connie talked about the red hair already. My second granddaughter has auburn color hair. And so kind of, that was awesome. So a little fun with that. And it does mean if you have red hair, you might be a little feisty as well. So a little inside joke there as you guys talked about that in the chat. Yes, Jax is with us here today, so he is the emotional support dog for us all. For us all, get that? All right, like that. All right, let's go ahead and get started. Now this class is on trading growth and value stocks. I want to talk a little bit about some of the growth areas. I will just mention a little bit of value here perhaps, and we're going to talk about probably more growth than value. Now, when we talk about the markets here today, want to make sure if you have any questions, go ahead and ask those questions, especially if we had questions on the market, sectors, things like that. Want to make sure we inject that right at the beginning. Now, also a quick reminder that this session is not a one-off. You can join us on a weekly basis, but you can also actually listen to this on a recording as well. And also, you can go to youtube.com. You can go to Trader Talks, Schwab Coaching Webcast, and find us there. Subscribe, and that way you can see all of our content outside ETFs. Now, also remember the information here is provided for general informational purposes only, should not be considered an individualized recommendation. Also, Schwab does not recommend the use of technical analysis as a sole means of research. Many of us started with technical analysis. That's probably an easier place perhaps to learn. We're visual people. But other analysis like fundamentals, macro, intermarket, very interesting stuff. Boy, it gets very enlightening when you actually start to put it all together. Okay, welcome to the club. Now, also remember that we will be using the Paper Money software application. Practice with the paper trade there. Even if you trade real, it's always good to actually use paper to kind of practice orders or strategies and so on. Always make use of that for learning purposes. And also remember when we talk about dividend paying stocks, they might pay a dividend now. They could raise the dividend. They could cut the dividend. We know that those dividends are not guaranteed, so that's just a risk for that. That's why you're monitoring what the earnings are, and is there a change to earnings that might influence what the dividend could be, or could that policy by the company change? That's a big one since we're talking about some of the fundamentals. Also remember that investing in stocks involves risk, and also as we talk about some of the workshops, you could join us here in Denver, Anaheim, or the Market Drive. Denver is actually a technical analysis option strategy workshop. The Anaheim is the advanced concept workshop on advanced options. And the Miami Market Drive is really a one-day format. You can go to schwab.com/events and see the calendar for the rest of the year. Now, the seating is limited just because the room size is, well, you can only take the walls out so far, okay? But feel free to join us. You do not have to live in those areas. You might be in those areas or travel to those areas. If you're a Schwab client, we welcome you there. Join some other like-minded investors like yourself. Now, also remember when we talk about our agenda here today, I do want to talk about the market. I want to talk about some of the sectors, some of the industry groups that we're seeing here today. And the first thing as we kind of get into that, we'll also bring up some of the growth stocks. We talk about MicroStrategy, Palantir, among others, and kind of talk about some of the correlation to maybe an asset class we talked about yesterday. And I want to have a little further fundamental discussion. Now, so first off, today we woke up today and gold was down 100. Gold was actually down 125 in like the first hour of trading at about 9:30 a.m. Eastern. Hadn't seen that for a little bit. So let's actually go ahead and take a quick look at kind of where the market was. First off, let's kind of start with I'm going to bring up, let's go SPX for just a moment, okay? Now, I was on the chat for Barbara Armstrong's webcast, and she talked about, for example, the up move in price, and hey, it was nice to actually see, especially if some of us are bullish, okay? And let's just kind of say this point blank. There's probably more investors that are bullish than bearish, okay? Many of us have accounts where we're long-only investors, and that just means that we can open positions where we're thinking the price could appreciate in value or hold in value, etc. Many of us are not maybe doing bearish trades. I'm not saying nobody, okay? Some might be saying, James, I don't have that education yet. But when markets go up, I think there's probably more investors saying, yeah, I like that, okay? Now, just like we did last week, we showed bearish examples. Continue to practice that. Become proficient at that. Learn about upsides and downsides of different types of trends, okay? Now, today, we kind of went right back to that 54.18. Significance? Well, that was a 61.8% fib level. Now, we said this was like the Berlin Wall. Can we get above it? So far, rejection. We're going to call it the Wiley intraday high upper shadow. Wiley doesn't like upper shadows. That upper shadow is when the price rallied and then sellers saw where maybe that resistance was, and they use that opportunity to sell, or back the truck up. Beep, beep, and they sold the stock right into the resistance. Now, why do they do that? I mean, what person would want to just rain on the parade of a bullish investor? What type of person would do that? Well, the type of person that keeps seeing that resistance is not broken, and when the price goes up to that level, they say it's probably going to do it again. And they were right again, okay? Now, when does that change? Well, the price needs to not only get above that 54.5 level, but we need to close above that level so those people will stop doing that. Now, is it any of you? Speak now, forever hold your peace. Now, we did see actually a little positive here today. The volatility, or known as the VIX, that was a fresh, can you smell it? Fresh new low on the VIX. Now, can we say that is like an unbelievable signal? I don't think it's, I think many technicians would say that's probably not a bad signal, a fresh lower low. I think we also do need to make mention is that we're still at the 27 threshold, price-wise, price level-wise, but it was good in the short term, a lower low. Now remember, you want to see the VIX decline if you're a bullish investor, okay? So not seeing a crossover to the upside on this, helpful, especially if you're a bullish investor. Now, last but not least, when we look at the NASDAQ, did it get above the 61 there? The answer is no. So just like on the SPX and the NDX, your eyes are watching that 61% line. If we can get above there, that's a start. Really want to close. You're going to see that really on the NASDAQ itself, 19,268, that's the major level where we broke down from, okay? Broke down from. And then we weren't able to get above that yet. This is that large Eiffel Tower candle that's like touching the ceiling on my monitor, okay? You can start to get above that. It's starting to kind of wipe away some of that bearish pessimism. And there's a lot of pessimism out there. But they could eventually realize the trend is kind of changing. Now, are there any questions that you have? Any questions? Now, the comment from Speak Truth, gold down 2.4%, silver up 3.5%. Yeah, so remember, gold was at 3,000. It went to like almost 3,500. It's had a massive run. In a very short period of time, it's been a monster, okay? But it did actually peel back really about 125 points, okay? 125 points is what it went down, but it was after a monster run. Now, remember, we've been talking about gold. We've been talking about Japanese yen. We've also brought up the Swiss franc, okay? Franc. And also the euro and the British pound. And really what we're really talking about is the dollar, okay? There had been just an absolute walloping of the US dollar, and which had made other different areas, currencies, attractive. Now today we actually kind of found some footing, and maybe is this the bottom? Some people like tails on the bottom of the candles that are near the moving averages. So I would kind of say that today was the first time I had seen in a while, maybe you too, where we kind of saw some of those safety areas or those areas where people ran to maybe start to fall in the short term. We're not saying intermediate, those trends are broken, but this has been the first time in a while where we saw gold drop. We saw the dollar rally. We saw those other currencies decline, and also a fresh new lower low on the VIX. Now, with all that optimism, okay, let's kind of look and see, is there anything that actually could be maybe growth or value, maybe a potential trade? Now, yes, hello, Lisa. And just real quick, let's just see just real quick. I want to see if there's anything else. Now, by the way, what I'm going to do is let me kind of go back to something I'm going to show you, okay? One of the comments I want to kind of make mention of is when you kind of look at the portfolio, we've been doing examples of bullish trades and bearish trades, okay? Now, if we looked at this column, now just forget this column right here. If we kind of see, for example, I just want to look at pluses and minuses, okay? Anything that's plus, bullish position. Anything that's negative, bearish position. Again, I'm going to re-show you in this portfolio, if you said, well, how many bullish positions do we have? A lot more than bearish. Do we have some bearish positions? We do, okay? What you're going to notice is if you add those all up, you're going to see that total there is 515. So that's really kind of saying if the S&P were to move up about 1% and or 1 point, if you will, you're going to see that this portfolio potentially might move up about 515. That's a forecast, okay? That's assuming that all these stocks went up $1. Now, how likely is that to happen that all of them do? That's what I'm saying. It's a forecast. Doesn't mean it's going to happen. But if that number is positive, the portfolio is bullish, okay? Now, let's kind of talk about this. So the biggest thing is, I don't want to kind of, if we kind of said, well, James, if someone has some bullish positions, but also has bearish positions, could they be what's called long and short biased? Yes. Okay. So if we do a bearish position like sell a stock short, it doesn't mean the portfolio is bearish. It just means that that position is bearish, but the overall portfolio could still be bullish as shown. Now, in your portfolio, in paper money, do you have examples of bullish trades and bearish trades? So if you do, you're kind of maybe similar to the paper money account examples. Now, today, let's actually go ahead and take a quick look at this. What I want to do is go back and let's see if there's any other questions here, okay? So first off, I'm going to go back to the stock that we actually pulled up the other day, and that stock was MSTR. Now, if we take a look at this, the reason why we talked about MSTR is that was a stock that really started to get above the diagonal line of resistance. Now, the funniest thing about diagonal line of resistance is people will say comments like, yeah, it broke the diagonal line. Let me kind of put 321 right there. But I want to see if it gets above 342, okay? And then if it can get above 342, then I want to see if it can get above 369. Then I want to see if it can get above 400. Then I want to see if it can get above this major level of 436. And then if it does that, then the same person will say, well, it's too high now. Well, Captain Obvious would say back, these old supports, new potential resistance levels, those really become areas that might become resistance. Okay, that might be where we make a higher high, only to actually pull back and really try to make a higher low. Run back to the upside, make a higher high, pull back and really try to make a higher low. Run back to the upside, try to pull back and really try to make a higher low. So I want to kind of keep this in mind that a breakout, whether it's diagonal or horizontal in nature, it's a start. And the prior levels, they are potential resistance areas. Potential. Okay? Now, Josh, I didn't want to say your name before I kind of smoked you out there of that bush. Josh actually says, JB, he's listening to me talk to myself. Josh, we knew it was you, and you're not the only one. All right, so, okay. Now, on MicroStrategy, what I want to do on MicroStrategy, this class is really a stock trading class. Now, I got the earnings section coming up on 5/1. Now, this is really important here as we talk about kind of stocks that might go up, which companies might be more resilient to maybe economic shocks. What does that even mean, economic shocks? Well, maybe fiscal changes with the government, monetary changes with the Federal Reserve, right? Different economies throughout the world, maybe struggling, whatever, just up and down, fear, lack of confidence, whatever you want to call it. Which companies might be kind of more resilient. Okay. Now, when I say resilient, I'm talking about price-wise, technically, but also fundamentally. Now, let's go take a look at this. Okay. Now, here's the funny thing is whenever we kind of pull up fundamentals, someone might think, well, oh, you're an analyst. I can assure you that when we talk about fundamentals, it is a lot deeper than what I'm going to show you. I can tell you that, okay? What we're talking about is just looking at some ratios and then looking at the direction of the numbers, okay? Now, whenever we actually talk about ratios, we're really, our measurements, we're really talking about share values. We went to the Analyze tab, fundamentals. And if we do this, what we're really trying to get a sense of is like, what is the company doing in terms of sales per share? Why do we even care? Well, sales per share or revenue, we're trying to say, is the revenue increasing per share? So it takes the revenue in units of millions of dollars divided by the number of shares outstanding, and it says, is this increasing over time? Now, this is where it's so interesting to see that these numbers, they were about flat for 3 years, then they sunk, and then they actually sunk again. Can anyone actually tell me why the stock's going up? Now, this stumps a lot of people, okay? Even though the stock has really gone down over the last 5 years, why has the stock been going up? Well, sometimes it might be what we talked about yesterday. This company, or some companies like it, might be using some of their cash and actually using not just, let's say, fixed income, but might be using a different type of potential liquid product to try to influence the profitability of the business. Okay, starts with a C, ends with an O. Now, what you're going to see is, so fundamentals in terms of revenue, it's shrunk. Earnings per share, net income over shares outstanding, it's even shrunk. Matter of fact, it's the second worst we've actually seen on the chart. Why is the stock going up? Okay, so when we really look at this, could we say there's a fundamental picture here? Nah. Now, other things like return on equity, okay, net income over average equity, it's negative. Return on assets, okay? So here we're not looking at, equity is looking at assets minus liability. Assets, just flat assets, okay? Both of them are negative. And when you really take a look at the net profit margin, wonder if this was your business, Lisa. This wouldn't be something you would be like, wow, this is doing great. It's even negative. Now, this is gonna blow some people's minds. Why on earth would someone invest in a company like this? Good question. So welcome to the world of technical analysis. Technicians, they might not even be looking at these numbers. What they've been, keyword is historically. Technicians are usually saying, what are you doing for me? What's that word? Give it to me. Now. Oh, that, thank you. Now, okay? And also, what could you do for me in the future? So this is where you have to understand that when we look at fundamentals, it's historical. They're giving us a track record over time, but that doesn't mean that the numbers can't change over time. Now, it leads us to kind of believe, or wonder, if you will, that if that stock is maybe breaking to the upside, what's the forecast? Could they be more, maybe perhaps more profitable than some investors think? That's why they're buying it. And could those fundamentals be starting to improve? So the moral of the story is you could start with kind of fundamentals that have struggled, they get marginally better to a lot better, or the vice versa. Done really well, cool off, and go cold, okay? Two different viewpoints. Now, what I'm gonna do in this is we're gonna show an example of a stock trade. We're gonna right-click on the price graph. When we right-click on the price graph, we're now gonna come down to where it says Buy Custom, and then with OCO Bracket. Now, when we do this, what I'm gonna do is we have a target here. Let me put this in the paper money count so we can kind of put this and track this over time. PLTR, I'm going to use the IRA in this example. And what I'm going to do is I'm going to right click. Now we can do this, go to the trade tab. We're going to right click on the ask price, buy custom with OCO bracket, or you can just do it on the chart. Same way, okay? There it is. Now what I'm going to do is also position size for $6,000. $6,000 or $8,000 is really what we can invest. We'll click on that percent. Let me maximize this so we can see it. Percent, dollar amount, and then here's where we actually type in the capital in terms of US dollars. Now, I'm going to click on this right above that and snaps it, and it tells us that's really 59 shares, okay? Now, some of you might be asking the question, what do they even do? Okay, well, let's pull this up. So fundamentals, go back. So analyze fundamentals. What do? They build software platforms, intelligence community, counterterrorism. Man, you're going to see the next stock. That's kind of been a big one as of lately. They're in the US and the UK. And what you're now going to see is it's kind of really trying to gather intelligence sources. Boy, there's been a lot of that stuff as of lately, hasn't there? Anyway, state of the affairs, I guess. Now, what I'm going to do is let's pull this back up. So when we talk about the target price, okay, I'm going to put the target and the stop GTC there. I did. And I'm just going to go back to this dollar amount right there. I'm just going to put it back. The pool, I call them pool balls, or the value in units of shares. I'm just going to type 60 shares. Okay, 60 shares. Okay, or round up one whopping share. Now, when we go back to the chart for just a moment and say, where is that potential target? Well, the first target might be 369. Now, let's say our initials were JP, and JP says, okay, fine. I'll maybe potentially look for 369. I'm going to put this right there. 369, which is at the first level of resistance. Now, this class is called trading growth and value. So we're looking for stocks that might have broken resistance and trying to go to the next level of resistance. Okay, or bounce, pull back, buying at a low, trying to sell at a high or an equal high. Okay, now when we actually do this, right here, we're going to put in that price. And what was that price? 369. Okay, pulled on the wrong. Let me pull that. That's weird. Sorry. Let's go back and forth between. I'll fix it. Okay, don't worry. Put that right there. Right click, buy custom with OCO bracket. Let's see how many we got. Just doing the same thing. I had it on the other one and we switched over to the paper money account so we could follow the trade. 6,000. It's going to be 17 shares. Okay. Now, if I click at the kind of put this back, plus 17. Now, what you're now going to notice is if we do that, we're going to put the number. What was that number? 369. Put it right there. Okay. So we're right back to where we were. Okay. Limit dated GTC. Now, what we're going to see in this case is if I go to dated GTC, we just actually setting the stop. Now, if I take a look at this, what you're now going to notice is the stop underneath. If I go back to that chart, what you're going to see in this case is really about 317, which is really the breakout area. And then also, if you look at that, if we try to give it a little bit more movement or room, it's really about 303. So the spot that we're really going to be watching in this case is right about 321. Now, if we look at, let's say, 321 less, let's say, 2%, that's really going to get us about 314.58. Okay? So if I type in 314.58, let's go back to that paper money account, 314.58, I'm going to put that stop right there. Now, some people really look at reward to risk and things like that. You could if you wanted to, okay? I've kind of stated kind of my viewpoints on that. You can have your viewpoints on it. Some like to give it a little bit more generous stop, so there's lesser chance of being stopped out, still a chance. And then we have a target right at 369. I'm going to go ahead and say confirm and send. And now what we're going to see is, we're going to say with the stop order, there's no guarantee the execution price will be equal to or near the activation price. The activation price is the stop price. Okay, so in this first example, this is an example of something that doesn't really have a fundamental history. Matter of fact, it's been really, really ugly. Now, the point to kind of really bring out with this, and I'll fix that, the point to really bring out with this, if we go back and really take a look at this, how long can the company go for as far as just going negative earnings per share, negative earnings per share? Negative earnings per share. How long can they go for? Well, we know just like as consumers, if you're actually going, if you have more expenses than income, you're bleeding your assets. Just like with the company, they might have to raise capital, maybe bonds, They might have to borrow money, get new investors, and so on. It's going to be harder and harder and harder to really actually continue to actually print negative signs. The other thing they could do is issue common shares of stock, but then you dilute the shareholder. Okay, so there's ways to do it, but usually the company, the CEO, CFO, CTO, they're actually trying to get the business to make money. Okay, any of those other things we talked about, that's not a great scenario there. Now, I want to go back to the second one, Palantir, PLTR. Okay, now I want to kind of say one thing just real quick. The reason why we brought up the MSTR yesterday, historically, that's had a correlation to an asset class that we talked about yesterday. Continue to watch and see if MSTR has a relationship to that asset class. Okay? Now, some people are not going to buy that asset class that we talked about yesterday, but they might buy a stock that has a correlation to, okay, that asset class. They're buying a stock, not maybe another product that you might be thinking. Now, you might be wondering, well, how on earth would I see a correlation? Well, just throw a chart on, okay? Now, what I'm going to do in this case is I'm just going to pull up, let's say, if you don't mind, I'm going to show you what I mean by that, okay? If I pulled up a stock like AEM for just a moment, AEM, and we went to, let's say, how would I actually kind of look and see if I'm going to go studies, and then going to go to add study, and I'm going to say, look, could I just maybe see if this stock AEM is correlated, let's say, with the example of gold and silver? Well, if they're correlated somewhat, the lines should be pretty close to each other. That's what we mean by correlation. Not exactly, okay, but probably pretty close. Now, this is looking at gold and silver. Now, if we look at this, what you're going to see is when one goes up, the candlestick chart actually goes up. When the purple line, which is the gold and silver index, when it goes down, stock goes down. Purple line goes up, gold and silver, the stock goes up. One of the things I think that people don't really connect is correlation. Watch asset prices and then ask yourself which stocks are correlated to those asset prices. And a lot of institutional investors, they look for correlation. Okay, a lot. Keep an eye on that. Now, comment is, I think MSTR still has audit and financial statement issues. If so, hard pass. Now, by the way, if we actually, so how do we get this off? Right click, remove study. So one of the things that can actually happen is if they have, let's say, financial statements that need to be rechecked, okay, maybe they have to go back and, let's say, restate prior statements and make changes. Yeah, anytime you actually throw maybe some kind of misty clouds like that, it's kind of doubting what they actually thought. Are the numbers real? Are they better than expected, worse than expected? So this is why you always want a company that actually really is solid on the fundamentals, so that way the investor could actually have more confidence in the numbers, okay? All right, so at the watch. Now what I'm going to do is confirm and send. We'll send that one off. Let's go back to Palantir for just a sec. Tell me what you see on Palantir. What do you notice? Okay? What do you notice on Palantir? Well, Palantir, if you take a look at that one, and I'm going to show you some different ones, technically and fundamentally, okay? Now, if you really look at Palantir, we actually saw a price high right around 97. Falls down. We saw buyers buying below support. Okay, now, why would you buy below support? Many investors say, you're out of your mind. I ain't buying below support. I mean, that completely goes against everything, okay? Broken support is like broken trust. Usually when there's broken trust, you don't say, look, let me give you a couple, I'm going to buy on broken trust, okay? But they did. And they rammed it all the way back up to the prior high. Short, shallow pullback, doink, okay, to a brand new high. Now, again, what you got to understand is most stocks actually have earnings. Now, don't worry about that. because we've taught you many different types of strategies that the investor might consider that change whether there's a defined risk and so on. So when you have earnings upcoming, if you're a stock investor only, you're probably very much focused on the 3 to 4 weeks prior to the earnings to see if there's breakouts or bounces going into the earnings. Let me repeat what I just said. If you're a stock investor, probably 3 to 4 weeks prior to the earnings, you're looking to see which stocks are starting to bounce up or down ahead of the earnings. And a lot of investors will trade to the expectation of what the earnings could be, good or bad. Now, if we're inside 2 weeks to earnings here and we're seeing a breakout, some might think the earnings might be in line, better than expected. They also maybe with this might be thinking, hey, could they raise the potential guidance? Now, let's actually go back to the Analyze tab for just a sec. Let's go back to the fundamentals just real momentarily. What you're now going to notice is and I'm doing this on purpose. I kind of showed you a company that was struggling a little bit. And when we look at the sales per share, this is not something that has unbelievable high levels of sales per share. It's barely above zero, okay? Now, I'm going to show you some different ones here in just a moment, but they're positive, but that's not like really a big number. Now, the problem with actually starting with a sales number closer to zero is, you guessed it, it's harder to have positive earnings per share, okay? Because of expenses and so on. And what you're going to notice, they were negative. They went positive and they went more positive. Now, we're looking at the annual numbers. We could click on the quarterly and actually see the breakdown there. Now, clearly as an investor, you want that number to go up higher, so it probably increases the chance of padding really the earnings per share number. Noted, that's why investors watch the earnings so much. Now, I'm going to tell you, people talking about it, and actually doing it are totally different. Now, if we look at the return on equity, it's better than the previous example, and I'm doing this kind of progression on purpose, and you look at the net profit margin, it's better, okay? Now, again, when we talk about trend analysis, that could be looking at the price, but we could also be looking at trend analysis of these numbers over time. So just like a technician, you see the trend and it's made higher highs and higher lows. You're thinking it could keep going up. You don't know that, but you're thinking it might trend. Same idea with the fundamentals. That if actually these numbers are actually improving and things in the economy are actually holding in, could these potential numbers increase? Now, the opposite is true. If they are flat or down, could they stay sideways or even get worse? So trends are trends, and trends can change until they don't. Now, the biggest actually thing is when we take a look at this, I'm going to go back to Palantir and right-click on the chart, go down to Buy Custom with OCO Bracket. Now, why do people actually look for companies that were negative that now turn positive? Now, I'm going to kind of say like a Tesla example, right? Tesla bled red ink for a long time, and then they went profitable. I'm not saying Palantir is Tesla, but I'm just saying it's the same idea that maybe the company is actually starting to create sales. Those sales could actually lead to earnings growth, okay? Now, what I'm going to do in this example quickly is I'm going to set a target maybe at a little bit higher level than maybe some people might think. I'm even going to put it maybe 116, the earliest, maybe 110. Whenever we talk about setting targets like this, that does not mean it's going to go there, okay? It's just a target. We're saying if it goes to that price or higher, sell, sell, sell. And it's at 110 or higher. That's the key words, or higher. Second, the stop underneath. We're going to take that prior low. I mean, the lowest recent pullback area is right around, let's say, 90 bucks or so. And the second one that I think many more investors might feel a little bit more comfortable with is at the 95-ish threshold. That 95-ish threshold is that where the place where we had the moving average crossovers. Okay, so what we're going to do on this example is we're going to set the stop a little bit closer, about 95-ish, less 2%, 93.10. Okay, now in this example, 93.10, okay, dated GTC, there it is. Now, for time's sake, I'm just going to type these numbers in fast to kind of see if we took a capital size of $6,000, okay? We said on any given trade it'd be $6,000 to $8,000. Let's say we use 6. It's really going to be about 59 shares of stock. Now, we don't have to change that top number. It's just going to say we're willing to buy up to $6,000. And once we buy those shares, sell those shares. I like to kind of see that row 2 and 3 have the same number. So I like to kind of just find out how many shares it is, type in 60, and when I do, it's all equal. I just like to confirm that, okay? But the other way is possible too. Confirm and send. And what we're going to go ahead and do is see anything that's in red lines. Now, you're going to notice, again, with the stop order, there's no guarantee. The execution price will be equal to or near the activation price. Now, the other thing is, if we have like a margin account where we sold something and those funds have not settled yet, okay, they might not allow you to trade until those funds settle, and that's for this example account. Now, I want to kind of show to you kind of something a little different, okay? I want to go to a stock called PM, and I want you to notice the differences here, okay? Now, if you look at a stock like PM, I showed you a stock that was kind of like fundamental struggle, okay? Then I showed you a stock that was like barely above the equator of positive earnings per share and sales per share. But let's kind of find a business that's a little bit more established. Now, by the way, all these examples came out of the S&P 100 or NASDAQ 100. I'm going to go to really the analyze and fundamentals for just a moment. Let's look at the differences and why has this stock gone up and maybe the other ones have struggled a little bit. Let's take a quick look, okay? So first off, sales per share, okay? Now, whenever you actually talk about buying a stock, you should be thinking about the business. What do they do? Who buys it? Is it like very well known? Is there like do they charge high prices or low prices? Is it something where if the product becomes better, would people be willing to pay more for it? Okay. Is there, when we look at, let's say, Philip Morris, we're talking about cigarettes and also, okay, smoke-free products, okay? Now, what you're now going to notice is when you take the sales per share, what do you notice the difference is? We look at, this is the third example. Well, in this example, the sales per share, 18, 20, 20, still slightly higher, 22, give me a 24. It's higher, okay? So it's shown some consistency. If you're an investor, do you want sales per share just all over, up, down, up, down, up, down, up, down, and maybe even just lower like that? Probably not. Now, this is where investors, if you ask them, fundamentally, where have your company has really been? I don't know. I just looked at the chart, okay? Well, let's imagine we're getting married now, okay? It's not just about JP's good looks or Lisa's good looks. You actually want to meet the family. You want to see the income statement, the balance sheets, and so on, okay? You want to see the trend history. This is till death do you part. Okay, I've carried that on a little long. But the biggest thing is, the moral of the story is, please look at it, okay? It makes sense to have an understanding of what is it that you're actually buying, okay? Now, when you take a look at this and what's built into it, the earnings per share, 516, 583, 581, 502, 452. So now those earnings per share, they did not go up, okay? So the question that an investor might ask themselves is, why is the earnings per share dropping? Okay, now, the one thing to note is the earnings per share did drop, but that dividend per share, okay, did increase. So even though they actually had less earnings per share, that dividend was still increasing. And some investors, they like dividends. Now, one thing we always want to say, if we go back to the trade tab and we actually look at the PM here, and I want to state this, it has a yield of 3.21. The quarterly dividend is 135. Now, you got to remember, they're just taking a look at the past dividend, the last one, and the previous for the last 4 payments, divided into the stock price, okay? And they're saying if you look at the 4 last dividends divided into the current stock price, the yield is 3.21. You have to remember when you look at a stock dividend, this is not a treasury bill. This is not a guaranteed payment of the U.S. government, full faith and credit of the U.S. government. They could cut the dividend overnight, they could raise it, they could lower it. So that's a risk difference compared to, let's say, a treasury bill. Need to point that out because we always think that, oh, they're going to pay me the dividend. No, we hope they pay the dividend, okay? But they can change the dividend. What's going to be likely to make them probably pay the dividend? Profitability, earnings conditions. Is the company still doing well, and so on, okay? Now, what might potentially make them raise the dividend? Better earnings environment, okay? And just know that that number is not always consistent. It could change. Now, the one thing I want to do, if you take a look at this, is we've gone past the earnings, and that was as of this morning. Their estimate at the very bottom was they were forecasting 161, but they got $1.76, a little higher. Now, the stock actually kind of sold off a little bit, but did make the brand new high. Now, one of the things you might be keeping an eye on is which companies tend to be more resilient. And if you're someone who likes dividend, which companies have actually shown a history of actually increasing dividends over time, if that's something you would consider. Now, what I'm going to do on this is I'm going to go look at also at its twin brother, Mo, which is not announced yet. Now, this kind of might think what's odd because, James, you start with Philip Morris. Why are you looking at Altria? Well, a lot of these companies can be very similar, but just have a different name, okay? And what we're going to show in this example is we're going to buy MO ahead of the earnings. Now, a lot of times they're thinking if PM did this, that company, which historically has been pretty potentially similar, okay? Now, wait, how do we know what the earnings are going to be? Could they come out and say that they're going to do X, Y, Z with the company? Sure, they could, okay? That's a risk. Now, what we're going to do in this example is we're going to buy these shares ahead of the earnings, wondering if MO, Altria, could play a little catch-up trade with its twin brother. Now, what we're going to do is with MO, let's take just kind of a quick look at those fundamentals, and we're going to put that trade there. If I looked at MO and said, what does it look like? It is not as strong as PM. Maybe that's why PM actually broke out first. But if you actually look at earnings per share, it actually has done better in terms of earnings per share over the last 5 years. Has it also shown a history of pumping out those dividends and giving those to the stock investor? Yeah. Now remember, when we say that, that could change, but there has been a history there, okay? Now, the one point I want to kind of bring up here in the last trade is we're going to try to show this example of buying the shares of the stock. We're going to also put a price target there, which I need your help. And then in terms of setting the stop, we're going to set the stop underneath this last recent low. 56.70, okay? 56.70, okay? 56.70. Let's go 3%. I'm going to try to be a little bit more generous there. As far as movement, $55. If we put a target on this, where might the stock try to really go to? I'm even going to go back to kind of where we were before, where we had a Fibonacci before, and that old level was really there. And we spent a lot of time where it just really didn't quite extend like the way that some investors thought. And if we looked at kind of some upside target potential, it's probably going to be about 61.92 to 68. I'm going to put in the middle at 65. Okay. Now I'm going to hold this kind of here so we can kind of talk about this in closing. Okay. So buying actually MO, thinking that maybe it might trail its big brother PM, which already announced. Could the earnings be similar? Now, have a target at 55 as well. Today we did 3 stock trades, all of them that were bullish. We talked about an example of a stock that was fundamentally struggling that might be improving, one that was barely above water, and maybe trying to prove Palantir. First one was MSTR, second one was PLTR, and also what you're going to see is the last one, MO. Now, I want you to go out there and practice finding stocks that have really shown improving fundamentals, but also companies that have actually been more resilient in terms of earnings per share, sales per share, and also maybe stocks if you are interested in looking for stocks that actually have had a good history of dividends. So with that said, I'm out of my time here today. I want to thank you so much for your comments and participation. Now, if you say, well, James, I'd be interested in maybe kind of applying derivatives to the things we talked about, we could mention that tomorrow. This class is more of a stock class. Now, I want to also thank Connie Hill for answering those questions in chat. Join Connie Hill's class right on our Schwab Coaching webcast schedule. Join her also on X as well. I want to say thanks so much for your comments and your participation and a little fun here today. So join us back tomorrow morning as well. And this class has been on trading growth and value. We'll see you back tomorrow, and also check out the recordings as well on our YouTube channel. Take care. Bye-bye.